Today. I wanted to make a quick video to go over the core logic again, just to give a reiteration of everything and kind of go over something created, and just to give a reminder of what the core logic here is and what we're looking for when it comes to plays. Let's go ahead and take a look real quick. So the Discord layout, if you have any questions on that, the way it's intended to set up, or to be set up, is you'll notice there's 3 circles next to each thread in the Discord. Now the threads are going to be underneath this channel. You'll see this channel, and you'll see a list of threads. Now the threads that show up are the ones that you've personally replied to. So if you want to open up all the threads and go through them all to see if there's any plays in there, there should be discussions in every single one, which is the whole point of it. So if you see red means puts, or a gap up has been identified, and calls are green, or a gap down has been identified. Now what that means is if you're on calls, that means you're trying to play in the direction of a void on the upside and vice versa for calls. Now if you see a yellow symbol, that should mean that max pain is near the current price for the current expiration week. So if you can all make sure we keep up with this, make sure we all keep the max pains accurate, because each max pain should be listed next to each different ticker symbol or ticker name. So if everyone could please do their part in making sure that we keep all of this accurate and up to date. Don't worry, the max pain automated program will be hopefully implemented by the end of February or mid-February. We should be able to get our hands on the data by the end of this month, so looking forward to that. As soon as we can get our max pain automation done, it should make this a lot easier. But until then, it would be very appreciated if we could all help keep the information displayed in the Discord accurate. So the current threads, again, we have 50 threads. Now I was very worried going through these because I was worried that there'd be a lot of plays in here that weren't meeting criteria. But after checking a few of them, it looks to me that, less a few mistakes made by some of the members just related to minor max pain mistakes. Other than that, it looks great. So keep up the good work there. So let's look at a few of them real quick. So UNH is one. Now this one is odd. So sometimes you're going to see gaps down and gaps up. So in this case, you have a bigger gap on the downside. So I would consider this to be puts, in my opinion. And I'm not sure the current idea as far as what to play here, but considering the gap is larger on the downside than the upside, I would definitely play puts here, and I'd wait a little bit longer to do it until this curve here flattens out. But normally this would be a call play. However, the only reason it's different is because you have gaps on the downside and the upside. So keep that in mind. As WBS, this one looks good. It's registered as puts, so I would agree here. You got your shape here forming, which is the place right here. This is when you buy calls right here. And this is when you buy puts right here. And we'll get into that in a minute. Next we have TMHC. Banana shape doesn't apply here because, again, we only have a gap to the downside. Remember, this is our call symbol here. So this does not apply because there's a gap to the downside. That's why we wouldn't buy calls here. We would buy puts, but in my opinion, I don't see any indication that you would want to buy puts here anytime soon. So I would hold off on this one for the time being until we get that trend that confirms our purchase being a put. Next we have VGR. This one is verbatim perfect. This is a perfect setup. So you got to keep in mind, most of these are not all going to be criteria plays. You want to look for ones like this, where you have the gap down, you have the shape, the banana shape. The shape's already starting to flatten out and curve. You have the broken RSI, or near broken. You're near the 52-week high. That is exactly what you want. So whoever found this one gets cookies. Good shit. Overall, people are selecting plays very well. Keep in mind for calls, this is when you want to try and time your buy. When you look for this symbol here, this is it. Now, if it looks like a put play, but the image looks like this in the MACD, I would avoid it because, again, it just creates convolution that's unnecessary. There's a lot of other plays out there you could be playing. So take a look at this. This is the ideal pattern for calls. Why? Because after it extends, this is typically 9 times out of 10 the pattern that follows. Is your uptrend making money in calls in the money. If you're going out of the money, the only reason I would ever go out of the money is if you can snag a call for real cheap with real low IV. If the IV is above 100, I would never. Make sure that it's at least below 100, and make sure that you're timing it very, very well, because in the money is the way to go. Out of the money is a lot riskier, and in the long run, I feel like in the money is the way to go. So we have the call pattern. What about the put pattern? How do we know when to buy when there's puts? Well, just do this little trick. All you do is you take a screenshot of the stock in question that you're considering buying puts for. Here we have Ford. We can see here on the MACD shape, this is the shape we want to see. It's the opposite of the call shape for puts, this one right here. So what you do is you take a screenshot of this little section of that MACD, crop it out, and then flip this image upside down. Now flip this same image horizontally. The same shape you would see if you were trying to buy calls does. So that's how you, a little trick to just give your brain the verification that all a put is a call flipped upside down and backwards, literally. So now what do we see? Gap down play and a gap up play. It looks the same. So now we have the original image before flipping, and we have the gap down play flipped. Those now look the same. And then finally, a gap down now matches a gap up play non-flipped. I hope this makes sense. Basically, all you got to do is take a call pattern, flip it upside down and horizontally, and it should look exactly like a call signal. And then you do the exact same thing for puts. If your call signal's there, if you want to take a screenshot of the call signal, flip that upside down and inside out, it should look just like your MACD that you're considering buying puts for. So, yeah, welcome everyone. The strategy is very easy. Let's try to clean up the threads. Not all of those are going to be plays, I can already guarantee you. I'll go through them one at a time just to make sure, but there is some anomalies that I've been seeing that people are picking that they're not taking into account. So just keep that in mind. Again, let me show you the picture perfect play. This one here is picture perfect put play. I'm sorry, call play. This is a picture perfect call play because gap down, shape is conforming to where it's about to switch trends, broken RSI, perfect. Gapped on earnings, perfect. I'll keep making resources and tools to help you all out. And yeah, thanks for joining, and I hope you do well here. You should. Take some time, just observe, and I will create a channel that no one can reply to, just for looks, that I will create for my top picks. It'll be 5 per week. Have a good one.